Okay, so welcome you once again to the IAS 16 section. This is a summary and introduction of IAS 16. It talks about property, plant, and equipment. Property, plant, and equipment. Now, at these standards, I'll list some few items here for you to take note of that. First, we should know the objective and scope, even though no exam now asks you. Objective and what? Scope, the coverage. Number two, you should know some terms, define some terms, definition of some terms in the standards. Number three, you should know the recognition, how PPEs are recorded or recognized in the financial statement. The recognition. Four, you should know the measurement, how PPEs are valued. So the measurement basis. Number five. Sorry. You should know the disclosure requirement. So disclosure. So if you pick every standard, these are the 6 or the 5 items that you should know about every standard. So objective of IAS 16 is to prescribe the correct accounting treatment of what? Property, plant, and equipment. For instance, the recognition, the measurements, and so on. Scope. It covers all PPEs except those covered in what? Other standards. For example, minerals, mineral reserves. IAS 16 does not cover mineral reserves. So if you store some wealth in gold and other minerals, this IAS 16 cannot be used to value the gold. No, you have to use a different standard because minerals are major standards determined elsewhere. And some biological assets, good. So that is it. And then some terms. Some of the terms that by the time we are done, you come across them. So I'll list some terms here for you. Those terms, we will come across them individually. So I don't normally define them at this stage, but because we've gone through the full lecture video already, I can release those terms for you. Now the terms that you hear are, number one, you should know the definition of PPE. The PPE itself. So let me list the term here. The terms. So the terms, they are one, the PPE itself, no shortcuts. Number two, cost. Number three, residual value. Residual value. Number four, you should know what is called fair value. Number five, you should know what you call entity specific value. Entity specific value. Number six, you should know what is meant by impairment. Just that impairment is being covered in IAS 36. When I get there, I'll explain it more. And then we should know the accounting treatment of bearer biological assets. So all of them are parts. So that is it. Okay, so these terms, I'll probably scan through them for you. When you talk about PPE, PPEs are our property, plant, and equipment. They are tangible assets. They are what? Tangible assets. So PPEs are tangible. So they are tangible. Let me clear this section and then start some few points down. So PPEs are one, they are tangible assets. Tangible assets. So they are tangible assets that's acquired by an entity with an intention not for sale. So acquired by an entity with an intention not for sale, but for use in production of what? Goods and services, or for rental. But use in what? So tangible assets acquired by an entity with an intention not for resale, not for what? Resale, but for what? But for use in what? Production of goods and services, or for rental. You can also acquire PPE for rental or for rental. There's also PPE for rental purposes. So that's the definition for PPE. For all these ones, I will not explain them here because if I explain them here, you won't understand. Cost, for instance, if I explain cost, you won't understand. When I get to the specific section that we need it, I will explain it there for you to get it. Okay, so now let's move on. So I'll move on straight to the recognition. Recognition simple means how do you record PPE? How do you record PPE? So recognition simple means how do you record what? PPE. So tell the examiner that recognition of what? PPE. How do you record PPE? Let me ask you a question. So PPE, you're asking for the real. Is it revenue, equity, expenses, asset, or liability? Obviously, revenue. PPEs are not revenue. They are not expenses, but they are what? Assets. Perfect. So PPEs are recorded or they are recognized. So they are what? So tell the examiner that PPE then recognized. The same as recorded. The word recognized same as what? Recorded as what? As an asset. Into bracket non-current asset to be specific. So PPEs or all PPEs must be recorded as what? Non-current assets. If the following condition has been satisfied. If the following conditions have been met or satisfied. That's it. So we have the recognition criteria. There are certain conditions that so the issue is that before you can record PPE as an asset, there must be certain conditions. So we should have to go through the conditions. So PPE, they are non-current assets if and only if certain conditions are there. Let's look at the conditions. We call it recognition criteria of PPE. Recognition was criteria of PPE. So the conditions are number 1 and number 2. Probably you know them already. You've come across them. So condition number 1, it must be probable or it is probable that future economic benefits associated with the PPE or the asset will flow to the entity. So it must be probable that future economic benefits will flow to the entity. So future economic benefit will flow to the entity. Please, if you define or if you state this point without the word probable, take note the examiner can mark you down. So bring the probable. Yes. So it must be probable that future economic benefit will flow to the entity. That is it. And then the cost of the asset can be measured with reliable. So the cost of the asset, cost of what? Of the assets can be what? Measured reliable. The measured reliable. So here we are saying that the cost of the assets can be measured reliably. That is what we are talking about. Now let me explain these points into detail. Let me explain them into detail. Future economic benefit. It means that these assets, before we can record this as our PP in our books, we have to make sure that the benefit will flow to us before we can record it in our book. So if we have an asset and then the benefit will flow to someone else, that person receiving the benefit have an accounting right to record it, not us. So it means that you can even own an asset. It means that you can even own an asset legally. You bought an asset, it's for you, but the benefit does not move to you, it moves to someone else. That person has to record it because wherever the benefit moves to, that person have an asset in accounting terms. So that's the meaning of what? The future economic benefit will flow to the entity. Good. So that is it. Now let's look at the cost of the asset. Cost of the asset. Now, the cost of the asset can be measured reliably. Here you are saying that before you can record any asset in the book, make sure that you can determine the value accurately. So, for instance, some of the assets you cannot determine the value reliably, so therefore, you should not add it to your PPs, should not include it. I'll give you a critical example. Example like self-constructed assets. Sometimes it's very difficult, or it's very difficult to separate or to determine the cost reliably. So for that matter, if you cannot determine the cost reliably, do not include it in your PPE register. So that is it. Now we are saying that if the cost, you cannot determine the cost reasonably, please don't put it in. So therefore, sister, thank you. Sister, thank you, brother, thank you, asset. If you cannot determine the cost, do not put it in the box. And then we have what you call self-constructed asset. Self-constructed what? Asset. When you talk about self-constructed assets, it's the asset that you probably constructed for yourself. Like, not that you construct for yourself. You did the construction by yourself. You developed that asset by yourself. For instance, the IT department joined the research department to create what you call our own hard drive. So the company's own hard drive. Now the question is, if we cannot determine the cost of this asset reasonably, we should not put in a book. Why are we saying this? We said that it's very difficult to determine the cost of a self-constructed asset reasonably. Why? Because it's very difficult to separate the cost. So the asset to be here, the asset that you've constructed for yourself is here, and then that of the company's overhead cost is also here. Now we are saying that these two things you cannot separate them. Why? Because you use the company's resources to construct this particular hard drive. So you find it difficult to determine the actual cost of this hard drive. So for that matter, you cannot record it in a book. If you cannot determine the cost reasonably. However, if you can determine the cost reasonably because you mounted an independent team to go through the development, then you can record it in a book as an asset because you can determine the cost what reasonably. Perfect. So that is it. Unfortunately for us, this is how far the good Lord will bring us. Thank everybody for coming. And please, I'm begging you, let's go through the videos before next meeting. Right.